How's it going, everybody? It's Stas here, and in today's video, we're going to be going over the markets, taking a look at the S&P, the Dow, and the NASDAQ, and we're also going to be doing a trading update, talking about what I personally did in these markets today, as well as a bunch of stocks and a bunch of ETFs that I'm watching and that I'm looking to trade right now in the middle of April in 2020. And I also want to go over some interesting information around some statistics we got around retail and consumer price index and how this has affected individual categories such as food, gasoline, and travel, and many others over these past couple of weeks. Some pretty interesting numbers in those categories, guys. So if you guys enjoyed this video, as always, hit that like button for me and consider subscribing to the channel. And feel free to join our Discord chat and our Facebook group linked down below in the description box. Those are 100% free of charge. So let's get into the video, starting off with the S&P. And you guys saw in the title of the video, the S&P ended up selling off. The markets in general ended up selling off today, with the S&P down $62.70, down 2.2%. And based on the technicals, if we zoom in a bit here on the S&P 500, on the 5-day, 5-minute chart, you guys can see 2760, which has been a level we've been talking about on this channel for many videos here, was like a brick wall today. We did not break below it, which is a very good sign for the bulls here. And let me explain to you guys why. Because this is a level that we actually held as a support back on the 9th of April, and it was actually a resistance on the 13th of April. So it was pretty critical in my eyes, for the bulls at least, that to remain bullish in the short term, we need to close above 2760. And the fact that we closed at 2780, that's a very good sign here for the S&P. And zooming back to the hourly chart, you guys can see 2760 puts us right on that 50 simple moving average on the hourly chart, meaning we actually held a higher low today. And again, the uptrend is intact, and these bulls are still in charge based on this time frame as well. So heading into tomorrow, what I'm personally looking for is going to be what the S&P is what direction is the S&P going to take, right? Are we going to test 2820, this general area that we actually tested a couple days ago? If you guys take a look here, on the 8th of, on the 9th of April, we were at 2815, 2820. So are we going to rally up tomorrow and test that level, maybe break out and test 2860 again, 2850, or are we going to retest 2760? And if we break that, we may be heading down to 2730, another critical level here. And if we break that level, there might be a further sell-off to the point that the S&P may be going back to the 2600 territory. So these are a couple things that I'm watching here on a technical perspective, on the S&P 500. Nothing crazy, but tomorrow and, of course, these next couple of days ending the week, it's going to be a big telling sign where the S&P is going to be moving here. And going back to a more macro scale, you can see the 180 SMA on this 4-hour chart is approaching, which, again, like we mentioned yesterday, that's a pretty big level of resistance. So pulling up the Dow ended up going down 445 points today, down 1.86%. And we talked about yesterday, very strong resistance at around 24,000, 24,100, and that still stands with today's price action. So for more upside on the Dow, we're going to need to break that 24K, 24,100, 200 level. That is quite critical. And from there, we may see a move maybe up to, let's say, $25,300, $25,000. I definitely think that is possible from a bullish perspective here in the short term. But tomorrow, from a bearish perspective, if we break 23,400, which is critical that we held that, as it was a resistance a couple days ago. So that's a good sign for the bulls too. But if we break that, as well as that 50 SMA on this hourly chart, this green line, we could be seeing some short-term downside on the Dow. Maybe back to 22.6, maybe back down to 22,500. These are some levels that I am watching. And when pulling up the NDX, the NASDAQ, yet again, it outperformed the other two major indexes that we talk about on the channel. It was only down 100 points today, down 1.15%, while the S&P and the Dow, they obviously did worse, like we just saw a couple seconds ago, right? And why is this happening? Well, big tech names, Netflix, Amazon, Microsoft, Google, Facebook, the FANGs pretty much. These have been doing very well to the point that Amazon hit an all-time high. Netflix, I believe, also hit an all-time high. This is absolutely insane. If we take a look at Netflix on this 3-year chart, yes, we hit an all-time high today, guys. So why is the NASDAQ beating the other indexes? This is why. Amazon, up 1% today, $2,300 per share. This is incredible. And why is this happening? Well, the CV, it's obvious why this is happening. Many more people are buying things from Amazon in the short term. And honestly, this is pushing the stock's price up. Although, like I've mentioned on the channel, I don't like basing long-term investment decisions off of short-term kind of noise, like people buying up Amazon in the short term in terms of their products because of the CV. But that's kind of what we're seeing here. Same with Netflix. People are consuming a lot of content on there, which is why I'd assume the stock's going up at this point, but still, it's interesting. It's interesting times that we're in, and I'm not sure if these values on these companies are warranted right now. They're kind of at levels that are quite overvalued in my opinion, especially Netflix, and even Amazon at this point. It's getting to levels that are pretty insane in my opinion, but that's a whole different topic for a whole different video. And in terms of the market, that's pretty much it, right? We had a down day today. The NASDAQ's holding up well, but overall, the technicals are still pointing to more upside. It does seem like the bulls are in charge. And when we take a look very briefly at the futures market, these last 25 minutes show a bit more downside in the market as well. It seems like we've been falling after the market has closed. So it's interesting to see kind of how this is going to pan out into tomorrow. And again, keep an eye out on those levels that we talked about. So let's get into some economic information here that I think is pretty interesting, and I'm sure many of you guys already saw this, but for those that didn't, let's talk about it. So, U.S. retail store sales by category. The percentage change from February 2020 to March 2020, it was an 8.7% change, meaning total retail sales split across all of these categories, which we'll go through, they were down 8.7%. And I believe from what I read, this is the biggest drawdown since when they started recording this statistic back in 1992. And that pretty much means, in other words, it's the biggest drawdown ever, right? So at least from when they started recording it. So that's quite interesting. And when we pull up the categories, I'm not going to be editing the video, or else I would put it on the screen here, but I'm sure you guys can find this picture on your own. Just type in retail store sales by category. I'm sure this picture will come up, but just strictly looking at it, we can see many of these categories have increased. Food and beverage, 25.6% retail sales growth. General merchandise, 6.4% growth. Health and personal care, 4.3% growth. Non-store retailers, 3.1% growth. Building materials and garden equipment, 1.3% growth. And those are all categories that kind of makes sense that it makes makes sense that they're going up at this point. Food and beverage, many people are stockpiling. They're clearing out the stores. That makes a lot of sense. And when we take a look at the negative retail sales growth, it's going to blow your mind when I tell you this, guys. Building materials, actually, no. Miscellaneous retailers down 14.3% from February to March. Electronics and appliances down 15%. Gasoline stations down 17%. What do we have here? Sporting goods, hobby, and musical down 23%. Motor vehicle and parts down 25%. Food services and drinking places down 26%. Furniture and home furnishing down 26.8%. Clothing and accessories, get this, guys, down 50%. And that makes sense, especially because the malls are closed. No one's really going out and buying clothes like they were, unless they're buying them online, which at that point, I can't really see that many people doing that at this point either. I'm sure there's some online shopping for clothing, but it does not surpass the normal volume from, in my opinion at least. I don't have the stat on that, but I doubt it passes the normal volume from when people actually go into the malls. So you guys can see how the retail has been just damaged over these past couple of weeks, and I'm sure the April data, it's going to be a lot worse. It's going to be a lot worse. And the consumer price index here, and if you guys don't know what that is, it's a measure that examines the weighted average of prices of a basket of consumer goods and services. It measures the weighted average. Let me say that again. This is straight from Investopedia, guys. You can do a lot of research on there about a lot of economic topics. It's the weighted average of a price of a basket of consumer goods and services. And like I said earlier in this video, this is declining in many categories such as gas, travel, and food. We're seeing the prices of these at lows that we haven't seen in years, and we can see that at our local gas station. Gas here in Jersey is at $2 a gallon. I've seen out in the Midwest it's down to about $1 a gallon for regular, that is. You see travel, buying, plane tickets, maybe going on a vacation now. It's extremely cheap. So we're seeing this in many different categories, which is pretty interesting. And I'd love to know what you guys have to think about that. And it goes to show kind of the consumer mindset right now. There's not a lot of people out there, obviously, going out, so they're not spending as much money, and it's dragging down prices in many, different areas of our economy. So let me know your thoughts down below in the comments section. And when it comes to the CV, I don't do updates daily here, but I like to do them once a week. Right now, I believe today, we passed 2 million cases worldwide. In the United States, their cases passed 600K, I think, today or yesterday. But at the time of this recording, they're at 613K here in the United States. So this thing is, it's still growing. It's still spreading. And of course, the market is relying at this point for there to be a peak in this and for the economy to open. And if that doesn't happen, or if that gets prolonged, I've talked about it on this channel, that could be a big hit for the economy. So I'd love to know again, and the stock market, that is. And I'd like to know again, what are your thoughts down below on everything? Now, for me, what I personally did today, if we can go over this pretty quickly here, I took 3 trades, 2 winning trades, 1 losing trade, and the first one was actually an SPXS, which was the losing trade. And I actually tried to get in, and at this point, I thought it was going to break out, and let me explain to you what I mean here. I tried to get into SPXS, which goes up whenever the S&P goes down. I tried to get in and try to get profit off of the potential 2760 break of the S&P. We talked about earlier in this video how this was a rock hard support for the S&P in hindsight. But when I was in the moment, I was thinking I could make a pretty good profit if this were to slip under and maybe fill the gap down to 2730, which at this point, that was what I was looking at. But obviously that didn't happen. So I got into SPXS at 12.10, and ultimately I ended up cutting losses at 11.90, which was roughly I think it was more of a, actually no, it wasn't 11.90 because it was, actually no, it was 11.90 because it was here. Yes, this is where I got in. I tried to get in 12.10. I did get in at 12.10, and ultimately the trade went against me. 11.90 is where I ended up getting out, and we can see the loss there is roughly about 1.3 to 1.4%. And when it comes to my other two trades today, I called this one out in the Discord chat, which, again, if you're not in there, it is linked down below in the description box. But we were looking at SPXL. At the same time that I exited SPXS there on that little loss, SPXL, which is the inverse to SPXS, was moving up because it tracks the S&P at a 3x rate. It goes with the S&P, meaning it goes up as the S&P goes up. So we were breaking this out, or rather, we were breaking up. And again, I called this out in the Discord chat, and I didn't catch this first rally, but what this first rally told me is that the bulls were taking over in the S&P, and obviously in SPXL since it tracks the S&P. So this was a really good first sign, and when we got the pull down to 31.58 or 31.40, 31.50, that general area, I got in on this pop back at 31.60, and I actually ended up riding it to $32.05. So honestly, guys, that loss on SPXS was negated, and I actually gained some on top of that loss. As you guys can see, if we look at where I got in, 31.60 up to about 32.05, it was roughly 1.4, 1.5, so I made back a little bit of that loss and some there. And the final trade of the day was in SPCE, which we talked about in Sunday's video, Monday's video. We've been talking about this one these past couple of days as it's been extremely hot, extremely volatile, and there's been a lot of opportunity in it. And we saw this morning SPCE literally took off. Actually, yesterday it took off. We talked about that from 16. It filled the entire gap to $20, guys. It busted through a couple of resistances. And this morning we actually retested 17.80, $18, old resistance as a new support, and we rallied back up. And as we rallied back up there, I didn't get in on this first rally, which would have been amazing. I kind of got in as it cooled off. So I noticed it cooled off a bit. It started rallying back up. Again, it retested 1920, which was a support from yesterday. Very key here, guys, because that tells me the bulls are in charge here, high or low from the previous and pre-market at 1780. So that was a really good sign. And we started to rally up, and as we cooled off here, this is where I entered. I entered at $20.05, I believe is where my limit filled, or $20.10, right around there. And I know for a fact I sold at $20.50. So that was another quick move there in, again, a very volatile stock that yielded me about 2%. So overall, that is what I personally did. And like I mentioned in every single video, guys, these are not stocks that I just wake up and throw money in. I actually plan this stuff out, and I kind of look at it the night before, and I'm like, okay, what can happen here? What can go wrong here? How can I make money here? What am I looking out for here in this stock, in this ETF combo? That's what's going through my mind every single night and in the morning pre-market and heading into the morning session. And a big tip and a big point of advice to you guys out there is, and I know you've heard this before from others probably, but maybe for the first 30 minutes of trading, don't trade. Take a look at what the market is doing. Take a look at how the market is reacting and kind of what direction it's picking. And this is what I do most of the time. You notice how in the trading update portions of the videos, most of my trades, they come from 10:30 a.m. Eastern to about 2 p.m. I'm trading in a window that it's not from the first 30 minutes of the market, which a lot of people do trade. It's more kind of in the middle 3-4 hours of the market. That's kind of where I'm trading, and I'm mostly not trading in power hour either. There's a lot of times that I don't. Sometimes I do, but I like locking in profits in the middle of the day and kind of shutting the computer in a way, because a lot of the time if I'm on the screen too much, and I know many of you guys can relate when I'm looking at stocks all day, I might get forced, or not forced, but a lot of the time, let's be honest, you force a trade. You try and get into, or you get into a trade that you normally wouldn't have, and then ultimately, if you're winning that day earlier on, and you keep on trying to take trades and win, you might take a bigger loss. So a lot of the time, I like just shutting my computer and just calling it a day. So I'd love to know what you guys have to think about that down below in the comments. Now, let's just get into a bunch of stocks and kind of what's been going on overall in terms of individual stocks here in the markets. So we talked about space, SPCE, Virgin Galactic. No need to go over that one again. But Netflix, Amazon, let's just go through a bunch of tech names to see how they did today. Netflix up 3%. Again, we said it hit an all-time high earlier today, up $13. Amazon up $24 here, up 1%. Shopify actually did decent. It kind of consolidated today, but still up $1, up 0.2%. And this is another kind of breakout stock that I'm watching here, especially if the markets do start to rip back to the upside, because you notice a lot of these growth names, they do a lot better when the market's ripping back up than, let's say, some of these value names like Procter & Gamble, Coca-Cola, Pepsi, Johnson & Johnson. You notice that. Growth stocks, when the markets get crushed, they get hit harder, but on the comeback, they go up a lot stronger for the most part. So Shopify, I'm watching that one. And when it comes to inverse ETNs, I'm watching natural gas, DGAS, and UGAS. And this is another move that we talked about in the previous couple of videos. I didn't take this move today, but if you did, let me know down below in the comments. But we talked about DGAS's potential as natural gas in general. The May contracts here, they kind of formed a lower high peak at 192 a couple days ago, and since then we've been seeing a lot of downwards pressure. And when it comes to today's price action, we actually peaked at 166 before the market opened, 30 minutes before the market opened, and we took a huge dump from 166 down to about 160. We rallied back up, failed to break the other high, so that's a lower high again. So in all, the downtrend is intact on natural gas. So at this point, DGAS is in play, I'd say, until we hit a lower low. If we hit 151, if we break into the 140s here on natural gas, at that point, I'm not going to be forcing DGAS, to be honest. I'm going to be more looking at UGAS more at that point, which goes up whenever natural gas is going up. So those are some technical thoughts there on those. And when it comes to banking stocks, they got crushed today. JP Morgan almost back into the 80s, down almost $5 a share today, down 5%. We have BAC, Bank of America, down almost 7%, 6.5% here, down $1.54. And Wells Fargo down almost 6%, down $1.75 here, down to $28 per share. And fun fact, guys, this is a stock that, if you want to know one of my biggest losers when it comes to long-term investments here, this is a stock that I was buying. This is before the whole crisis, of course, but I was buying this at $45, $40. The Fed cut rates to zero, which a lot of us were expecting, me, myself included, and that cut the price of Wells Fargo as well down a good amount. And yeah, fun fact, I'm down about 40% or something, 30%. I was down about 40% at its low. At this point, more like 30% on my Wells Fargo position. And when it comes to gold stocks, a lot of people were asking me, GDX guys, what are your thoughts? The truth is, it needs to cool off a bit. It needs to cool off a bit. Gold needs to cool off a bit. And that's exactly what this is, guys. The trend is pointing to more upside. The bulls are still in charge here in gold. Just because it had one little pull down, that doesn't mean the uptrend is not intact. You guys can see we're holding the higher low on the 4-hour chart. If we pull into the 20-day chart, you can see we're holding the trend there as well as holding 1730 to 40 in general. So we know when gold goes down, the mining companies go down, GLD goes down for the most part, right? And we saw GDX. Today, it was down about 2%. But does this mean the rally's over? No, it's just cooling down, guys. Literally 3 days ago, the stock was, $29. We rallied to 32. Now we're at 30.15. The bulls are still in charge. We need to let it cool off a bit. And once it does, and if we start making that truck back up, big if, because no one knows exactly what's going to happen, but if these technicals do pan out, my theory that gold's going to 2K pans out, GDX has a lot of potential to the upside, and we should be able to make more money there. So I'm going to wrap up the video here, guys. We went over pretty much everything that I wanted to talk about. What I did, thoughts on the market, some interesting data, economic data, and again, as always, if you guys enjoyed the video, hit that like button for me and consider subscribing. And please let me know in the comments, what are your thoughts on everything going on, the market, stocks individually, the economy? Are we in a depression? Are we not? We are in a recession, that's for sure at this point. You can't deny that. But I'd love to know any thoughts you guys have about everything that is going on. And if you guys want 2 free stocks from Webull valued up to $1,400, you can actually use my affiliate link down below in the description box. All you have to do is put in $100 into the account, and you get 2 free stocks, with one of them valued up to $1,400. And again, that's linked down below in the description box. So I'll catch you all in the next video. Thanks for watching. As always, stay safe out there, and yeah, peace out, guys.